Good morning, everybody. We've got a mixed trade in the grain markets here on Thursday morning. It is 6:30 a.m. Central Time. March corn futures up 3/4 cent at 6.03 1/4. March soybeans down 2 3/4 at 13.32 1/4. March Chicago wheat down 3 cents at 8.11. March Kansas City wheat up 1/4 at 8.54. March spring wheat is up 3 3/4 at 10.31 1/2. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, hit that subscribe button. Make sure you like these videos. Help me to grow this channel. If you need some additional assistance from me, guys, go to my website, www.standardgrain.com. Click on Grain Marketing Plan. Check out my subscription service, $49.99 a month. You can cancel it at any time. No other fee, no other obligation. You get only a fraction of the information that I send out via these YouTube videos and via the podcast. If you want some more detailed stuff, especially in regard to grain marketing, more actionable type advice, check out this subscription service, guys. Try it for a month or two. If you don't like it, cancel it. But certainly give that a shot over the holidays here. Lots of news regarding the Black Sea and wheat, that sort of thing. So the first story is this: Ukraine is considering limiting the export of milling wheat. Government officials reportedly, and these are all just reports at this point, concerned about high food prices as the country's inflation rate hits multi-year highs. This was a quote from a source. At a recent meeting at the Agriculture Ministry, officials indicated that restrictions are possible at the pace as the pace of exports is too high. Ukraine's exported a lot of wheat this year. This is all rumor mill type stuff at this point in time. But interesting stuff here. Ukraine, according to my USDA balance sheet that I glanced through very early this morning, USDA is projecting Ukraine to be the second largest wheat exporter behind only Russia this year. They've got Russia projected to export 36 million metric tons, Ukraine at 24, Australia at 23.5, the US at 23.4, and then Canada at 15. So you've got issues now regarding export restrictions in what are projected to be the world's two largest wheat exporters. And this sort of uncertainty is a friendly item in regard to the wheat market, in my opinion. Now, we've got some more Black Sea type stuff. Russia continues to build up military forces at the Ukraine border. This is old news, but the situation continues to escalate. Russia now has an estimated 122,000 troops positioned within 120 miles of the Ukraine border. The U.S. and its allies in Europe have repeatedly warned Russia, threatened them with sanctions, all sorts of stuff. American intelligence earlier, I believe it was last month, indicated to its European allies that there's going to be some sort of invasion in January. So you've got the world's two largest wheat exporters and a potential conflict that's not bearish the wheat market. I'm not going to say it's super bullish, but if some sort of conflict were to develop, guys, this is certainly an issue. U.S. ethanol production declined a little bit last week. Weekly output 1.051 million barrels per day. That was off 3.3% on the week, still up 8% versus the same week last year, down 3% versus the same week in 2019. So we're not like near all-time highs again, but still pretty strong numbers. Ethanol production margins are still good, but they have declined. Largely because corn prices have rallied and also because ethanol prices have come down. If you look at the Chicago ethanol swap contract, we peaked at $3.45 a gallon back in November, and we're down to $3.02 at yesterday's close. So that's a decline of like 12%. So you got that combined with the higher corn prices. Ethanol margins have come down a little bit, certainly, but they're still good historically. They should continue to encourage strong ethanol production. Ethanol stocks were down 1% on the week. They are still at their lowest level seasonally of the last 5 years, implying that we're using the ethanol that we're producing, although there is some debate regarding the stock situation. Some of the numbers don't really add up. Some people think that maybe there's some ethanol that's in transit that's not being accounted for. But in any case, I'd still say overall, despite a softer week, and that happens sometimes seasonally toward the end of the year, the situation's still pretty good. South American weather remains a concern. This morning's GFS run has not really changed much in regard to key problem areas of South Brazil, Argentina, and Paraguay in particular. Not really a whole lot of relief in sight in regard to rainfall from now really through the first week of January. Temperature is going to trend above normal in these areas. If you see any big shift in the forecast over the long weekend, the markets could react come Sunday night, certainly. Crude oil prices on the rise. Your nearby February WTI contract has retraced about half of that big break that occurred from the highs up in the 80s down to that low in the $62 neighborhood from earlier this month. So we've had a little bit of a rally back. Yesterday, EIA showed us some data that indicated a larger than expected drawdown in crude inventories. Also, this COVID stuff is moving crude. I mean, if there's a perception one way or the other regarding economic activity, if we have a new variant and they think economic activity will slow, that's bearish. If they think it's maybe not quite as bad, that's bullish. And at this point, more signs are pointing to this new variant not necessarily being as dangerous as its predecessors, not as many lockdowns necessarily. You've got news regarding the COVID pill from Pfizer, and some positive news regarding vaccine effectiveness versus the new variant. So I suppose some of this is friendly to the oil market. Export sales this morning at 7:30. Corn sales expected 725 to 1.4. Soybean sales expected 700,000 to 1.7. Wheat sales expected 200,000 to 550. Cattle market was higher yesterday. Cash cattle's just been scattered this week, but generally lower. 135 caught most of the volume. I think there was some trade as high as 140, but the board was higher. Feeder cattle marginally higher yesterday as well. In the outside markets, the U.S. dollar is up just a little bit. The S&P's up 13. The Dow's up 100 points. Bonds off a little bit. Precious metals mixed. Crude oil is up 17 cents at 72.50. Guys, we have a normal close in the grain markets today. Following today's close, we are closed tomorrow. We will reopen Sunday night at 7 p.m. Merry Christmas, everybody. I'm out for the next few days. I will talk to you Monday morning.